Mic check, mic check, mic check. 1 2 1 2 1 2. Mic check, mic check, mic check. 1 2. What does this look like? Shouldn't matter. It's good. It works. It's good. It works. That's all that matters. Okay, mic check, mic check. 1 2 1 2. We're gonna go over candlestick anatomy and what it means. Let me go help my son real quick before he has a panic attack. Come on, baby. Okay. You gonna watch? I'm gonna turn it on. No. You can turn it off? No. What do you want to watch? Mommy. What do you want to watch? Spidey? Spidey? No. What do you want to watch? Mommy. What's that? Which one? This one? This one? This one? Okay, thank you. You're welcome. Okay, I'm back. We're going to go over candlestick anatomy and pretty much, if you've never seen a candlestick before, how you can identify, look at one, and start to read them. So, jumping right into it, we're on the 15-minute time frame. So I'm going to go over this very straightforward and very simple. So we're going to look at this candlestick specifically. This is a bearish candlestick, meaning it went down. Price in this 15-minute span from 8:30 to 8:45, price was able to open up at $4,345, 0.8 to be exact. It opened here at 8:30 p.m. Price then traveled up into the levels of 4,350.8 and then made its way down all the way to 4,290. Not to throw numbers at you to confuse you, all I'm trying to say is this is the duration and the exact measurement of what price did in this 15-minute span. Price simply went from a high of 4,350 all the way down to 4,290. So a difference of about 60 points in the matter of 15 minutes. So price opened here. The wick represents the area and level of price activity that price was able to travel in that time. Wick to the downside also represents the same thing, and then the bottom will represent the close of that candle, simply meaning that at 8:45 this is where this candle closed at, and right around 8:45 exactly is where this candle opened at. And you're going to see candles seamlessly flow into one another because where one closes, the other one opens. And this one, we opened at 4,303, made its way down again to 4,290, and then made our way back up to 4,327, where price ultimately closed and didn't give us any wick to the upside. So again, within these two spans of 15 minutes, which would equate to 30 minutes total, this is the creation of a bearish candle being opened, traveling up, moving all the way down, traveling back up in closing, and then seamlessly opening with a bullish candle that moved down and then made its way back up. It didn't really give us any type of wick to the upside, and then just closed. And then the next 15 minutes, we seamlessly flow into the next candle that opens. Price moves down slightly, and then makes its way up, then makes its way back down, and then closes. This is the nature of candlestick anatomy. This is how price flows day in and day out from candlestick to candlestick. We're on a 15-minute time frame. I could blow this up, mark this, go down to 3 minutes, find that area I just highlighted. So again, same thing I just highlighted. It's going to look much different on the 3-minute time frame, but paints the same picture because every candlestick now represents 3 minutes of time frame, just duration of time. So in this candlestick right here specifically, price was able to make its way all the way down here, opened here, made its way down here, inevitably closed right here. Just flowed right into the next candle, opened here, flew down, flew back up, closed here. Next candle opened here, made its way down, back up, closed there. That is just the nature of candlestick formations and how price creates these candlesticks on a day-to-day basis, and what your job and what you should be trying to understand about them, and why understanding them is even important in the first place. I want to go over some patterns, some candlestick patterns that you'll see pretty frequently within the charts, and they are able to be created on any time frame, so you can see it on any time frame. So I'm gonna just draw out a few real quick. And these are reversal patterns, so you'll see these happen when price wants to reverse. Double top, double bottom. So this right here is a double top, this right here is a triple top, and this right here is a double bottom, and this right here is a triple bottom. These are very basic but very common patterns that you will find when prices moving up or down. They will create these patterns and then change directions. So let's go, I already marked some out on the chart, let's go find them and let's see what they look like on the chart. So I went ahead and labeled some double bottoms. I didn't find any triple tops or triple bottoms on the 1 hour time frame, but I did drop down time frame. So just starting on the left, making our way right, we got a creation of a double bottom right here after this push down from the ceiling. We turn around after we get this double bottom and make our way back up. Again, remember, these are reversal patterns. So when price is moving down, we're going to catch a double bottom and know that that double bottom is going to lead us back into probably a creation of another double top or triple top. And these seamlessly happen day in and day out, all day long. So after getting the creation of the double bottom, price pushed back up and gave us the creation of the double top, coming right back into the ceiling and rejecting off of it. Making its way back down here, we got a formation of a double bottom when price came back and couldn't push anywhere below the floor that was created. So this gave us a double bottom and very close to triple bottom, but it didn't touch, so I didn't count it. Right here is another example of a double bottom. And then let me drop down time frame so you can see these triple tops, triple bottoms. So I only found two. Just in this quick example, I found two, but here's a triple top right here. We're moving up. Price pushed down, created a one double top, pushed away, pushed all the way away, came back up, gave us one final tap that gave us a triple top. Price then turned around, liquidated all the way down here, which seamlessly gave us a creation of a floor that would lead into our creation of a double bottom. So when price came back and revisited this level, we seamlessly rejected off of it, creating a double bottom and pushing away. This was the hourly double bottom, so you can see how a triple top being created on the 15-minute time frame in correlation with a higher time frame double bottom. And then I refined the line to match active price action. So as we see price come in and reject off it, we get a nice double bottom, and then this led us into this last triple top that I always wanted to show. So we get one, two. Where did I see a triple top? Oh, right here. Again, not an exact triple top, but a near touch. But we get one push up, and we get a rejection off it again, and then we get another rejection right here, which was a mere triple bottom, but not an exact. But, you know, works the same way. One more thing I want to cover is candlestick patterns and engulfings. These are going to represent just another layer of understanding in price and why price is doing what it does, understanding it with, you know, a handful of other confluences that we're using to build our trade ideas. But just jumping right into it, I'm going to mark off some bullish engulfings and it's going to wrap up the video. Right here, we get a bullish engulfing, two candlestick pattern. We'll have two candlestick patterns and we'll also have three candlestick patterns. So while this is a bullish engulfing, let me focus on bullish engulfings and then we'll focus on bearish engulfing. So here's another bullish engulfing. Here's another bullish engulfing. And when I say bullish engulfing, it simply means the preceding candle is engulfed by the candle that follows. So this upward candle, bullish candle, engulfs this previous bearish candle, so that's why it's a bullish engulfing. Same with these bullish engulfings. While the wicks are not entirely engulfed, the entire price activity to the upside is engulfed by the candlestick itself. Here's another one. Here's a few more. Where's another one? I don't see any more. There's one right here, but it's not where you want to be targeting, but it is letting you know that price is overall seeing bullish engulfings while price is finding a double bottom. But let's focus on bearish engulfings real quick. So I see them all over the place. So bearish engulfings, we'll mark them in red. Here's a bearish engulfing. This would technically be a bearish engulfing. That's what I mean by price being an indication that that's what price is starting to do. Sellers are starting to consume the buy orders, and then you can see it happen, and then you start looking for continued confirmation. There's another bearish engulfing. There's a bearish engulfing right here, but we were looking. So this is, again, a double bottom is being created. This bearish engulfing is not going to be our all-tell sign to jump into a sell. It's just letting us know, hey, price is going to turn around, retrace, give us this double bottom, and then inevitably turn around. And you can even see these bearish engulfings on the double bottom. This is a bearish engulfing on the double bottom, but inevitably it couldn't close anywhere near the floor that was created. So again, this is the one that kept sticking out to me. This is a candlestick variation pattern. It's a 3 candlestick variation pattern because it requires 3 candlesticks to complete the pattern. Simply put, these 3 candlesticks, 1, 2, and then this third candle fully engulfs these previous 2 candles. This is why it's a variation, because there's 3. There's another bullish engulfing right here that I missed. Bullish engulfing, bullish engulfing, bullish engulfing. But yeah, you'll see them all over the chart. They're just candlestick patterns that, you know, you'll see them on every time frame. It doesn't matter where you're looking at the chart. This is on a 2-hour time frame, and you'll see them all over the place. Got bearish engulfing right here, which again, like I said, this is not the all-tale sign of, you know, a trade idea or trade setup, because if this is a bearish engulfing right here, why would we be selling just based off this bearish engulfing? We're not. This bearish engulfing was created because price was creating a double bottom right here. Price pushed up, came back, and couldn't close anywhere near the it did close on the line, but it couldn't close fully past the level that it would need to validate a push to the opposite side, or break a flow, break a structure. None of that. It was just simply a bearish engulfing, literally on a double bottom creation. So again, here's another bearish engulfing that inevitably didn't cause price to drop, but it did cause price to retrace. Bearish engulfing. Bearish engulfing. But yeah, that pretty much sums up the Candlestick Anatomy. You can watch the video over and over again until you fully understand, because it's not complicated. There's nothing complicated about it. It's very straightforward information. It's not meant to confuse you. It's meant to be simple. But